Trading hour, and this is our big story, metal index that's been surging in now. Nigel is here to tell us more. Nigel, tell us what's happening overall. Why are metal stocks in focus?
Well, I'll give you 5 big reasons, Sonal, and that's the same reason that I said last week as well. And from there on, we have seen a continued up move in terms of metal stocks. So sentiment globally seems to be changing. One is the street is bracing, or the globe is bracing for Fed rate cuts. Now, when Fed cuts rates, it normally stimulates the economies, and that's why, in fact, there is hope on that front. And now, it's a very, very high probability that in September we'll see a Fed rate cut. And Fed rate cuts are good for base metal prices. Point number one. Point number two. China's anti-involution drive, that's gaining momentum. What is that? They're restricting the supply of metals, steel, base metals in the markets because, otherwise they're self-destructing. So they're slowing down the pace of production, and it's very, very evident if you look at the year-to-date steel production as well as lower. And they're saying by the end of this year, there'll be further capacity cuts. So that's good news. However, keep an eye on exports because exports continue to remain elevated. That is the steel exports that I'm talking about. So that's point number two. Point number three, China seems to be on the recovery mode because both their manufacturing PMI, their services PMI that came out last week, that was better than what the street was working with. Point number four, let's look inward. The DGTR, they have recommended protection for the steel sector for the next 3 years. It will be 11 to around 12%. So there is some protection. And point number five, suddenly there's bonhomie between India as well as China. So that as well is giving a bit of a sentiment boost. So these are the top 5 reasons that metals have been buzzing.
5 important reasons why the metals are doing well. Most of the stocks are also doing well, but there is one that isn't, and that is Vedanta. Why is that so, Nigel?
Well, Vedanta always does something different, right? You don't know what the promoter entity is going to do next, and that's the reason why it's not been getting the valuations. Now, the problem this time around is they're being a little bit ambitious according to what the street has, the way the street is looking at it, because source-based information that our colleague Ritu is picking up is that they could be in the forefront to grab Jaiprakash Associates assets for around 17,000 crores. Though you need to keep in mind this is not a done deal and it will be done in a staggered manner. So, it's not a done deal as of now. But if it's a deal going in that direction, then the street doesn't like it. And I'll tell you why. Nuvama has put out a few points. They consider this event as a negative for minority shareholders, point number one. They are unconvinced with the rationale. The assets could be good. There could be some kind of dilution or some kind of sale of non-core assets, in the coming months and years if it goes through. But they're not convinced with the rationale. Point number three is they're saying it's an unrelated business. The priority should be in deleveraging. Why are you doing this? Point number four, they're saying in the demerged entity, the Vedanta Limited is likely to pick up this particular asset, which will be a cumulative of 17,000 crores. And they're not sure about, how exactly they will fund it. They see some kind of challenges in terms of funding it in Vedanta Limited, in the demerged entity. And point number five, they say that the culmination of the transaction will restrict any kind of re-rating. Remember, metals are going to do well. Then Vedanta is the play that you get exposure across various metals. But Nuvama, because of that, they are not too impressed with this transaction if indeed it goes through.
Okay, all right. So that's about Vedanta. But, even Morgan Stanley has come out with a note on the steel makers. Nigel, what's the note suggesting?
Well, they've gone ahead. They've upgraded JSW Steel, Tata Steel, as well as SAIL. On JSPL, they maintain their equal weight and the target price is 1,150. Now, they have put out a few data points. They are turning constructive on the steel spreads expansion. So that's point number one. The other point that they're saying is they're expecting domestic steel prices to recover from year on because demand will improve. And normally post the monsoon, you see a couple of price hikes that come about. They're also pointing out the other point that we made, that China's anti-involution theme, that's gaining traction. And besides that, they're saying that global factors are turning positive. So because of all of this, they've gone ahead and they've raised their steel price estimates for the next couple of years by around 3%. And that's why they expect the Ferrous Pack steel stocks to outperform over the next few months. So that's the tale with regard to the big story of today. You have metals that are buzzing on a whole host of factors. Vedanta is not performing, and steel, Morgan Stanley seems to have upgraded all of those stocks. Back to you.
All right. Interesting take there. Thank you so much, Nigel, for explaining to us. Metal's a big mover today, and that explains the reason why. But we have to talk about